This is a lecture from Open Tuition. For the free slides that go with this podcast, please visit opentuition.com.
The importance of ethics. There are valid arguments about whether or not a company should adopt corporate social responsibility, but when it comes to ethics there is very little argument, and one doesn't have to appeal to a moral or ethical stance to see that companies should be ethical. An ethical stance can be justified on purely economic bases. This rests on the fact that if a company acts unethically or immorally, it will usually be found out, and when it is found out, it is usually punished, either through the operation of the law, compensation, or by the loss of goodwill and reputation. Therefore, an ethical company reduces risk. Everyone can make mistakes, but if you own up to your mistakes, then you are limiting the damage, and you are reducing the risk that further damage will be done, and the punitive damages that may later be awarded against you. If risk is lower, so too is cost. Ethical organizations often have to spend less ensuring that regulations are followed. Lower risks also means that banks and other providers of capital, and indeed insurance companies, will be willing to supply the money or cover the risk at lower rates. In general, lower returns are required because risk and return go together. If your reputation is good, you are more likely to find good, willing partners with whom you can cooperate, perhaps to form joint ventures, or perhaps just to be satisfied customers. A good reputation will tend to attract better employees. No one really wants to be associated, if possible, with a company which has a poor reputation. Finally, a good reputation should increase goodwill and increase sales. Companies which are regarded as being unethical tend not to be trusted and certainly not liked by customers. Customers will always try to find an alternative. Therefore, for very sound commercial reasons, it pays companies to be ethical. Ethics, the law and regulation. Ethics are a set of rules on how we should behave. In addition to ethics, we receive rules from laws and from regulations, for example the regulations of a professional body such as ACCA. This diagram shows how they are related. We have to comply with the law, but then in addition we might have to comply with more demanding regulations, and finally we must comply with the system of ethics. Again, the assumption is that ethics will impose higher demands and duties than the law or regulations. Ethical principles. Ethical principles can be approached either by consequentialism or through duty, which is sometimes called the deontological approach. Consequentialism looks at the consequences of an action. For example, utilitarianism, a form of consequentialism, says that an ethical stance is to ensure that the greatest good is done for the greatest number. This might sound attractive and logical, but could, for example, be used to justify killing someone and using their body parts to save many other people. So the approach of, say, one person dies to save 6 others is unlikely to be acceptable to most of us. The other approach is duty, or deontological approach. Here it says behavior should be based upon absolute moral values, and we have a duty to follow these values, or codes. Relativist or absolute. Under the idea of relativism, there are many acceptable ethical standpoints. Ethics are relative. This provides some flexibility and more tolerance, but might lead to too little guidance as to what is acceptable, and an anything-goes approach could arise. However, this approach is capable of providing some level of tolerance and cooperation towards those with different values. The other approach is absolutism. Here, behavior should be based upon absolute moral values. But what is their source? Although the followers of a given code have a sure basis for their ethics, perhaps the main danger is that of serious conflict between followers of different ethical codes. Here are some examples of ethical problems that can face managers. First of all, the conflict between profit and public good, and this can be easily demonstrated in a pharmaceutical firm. Pharmaceuticals are expensive to develop, and companies need profit to encourage this development work. However, what approach should be taken to providing medicine to people who cannot afford to buy it at a price which yields profit? The company could withhold medicines unless they get the full selling price, but that of course does raise certain ethical dilemmas. Secondly, profit versus health and safety. For example, new aircraft and indeed new drugs are tested very extensively, but at some point a line is drawn, testing stops and the products are launched. If more testing were carried out, the product might be slightly safer, but more testing takes more money and delays any benefits that could arise from the product. Equal opportunities, for example in recruitment. Increasingly laws, and certainly within the EU, laws are intervening in matters of employment to reduce the likelihood of racial, sex, religious, sexual orientation or age discrimination. And finally, payments. And here we have 4 degrees of payment: extortion, bribery, grease money and gifts. Extortion is obtaining money or advantage by violence, intimidation or blackmail, and most people have no difficulty in accepting that extortion is wrong. Bribery is money given to bring about an illegal or dishonest act, and again most people will regard that as being unethical. Difficulties begin to creep in the next 2. Grease money is where you provide money to get someone, usually an official, to do what they should do, but perhaps to do it quickly and more efficiently. They're not actually breaking the law, they're not actually doing anything they should do, you're just encouraging them. And finally, gifts. Gifts in some societies are very normal. You wouldn't conclude a contract without some sort of gift, but of course a major gift is getting towards maybe looking like bribery, and there can be difficulties in assessing whether or not gifts are ethical. The following values and approaches should promote ethical behavior in organizations. First, openness. For example, employees must be open with their managers if an accounting error or other mistake is discovered. Trying to cover up errors could not be considered ethical. It will only make matters worse. Trust. For example, employees must trust their managers because of their knowledge and experience, and indeed the manager's own ethical stance, that the managers will give good guidance and direction. Honesty. This doesn't really need much expansion, but it's important that honesty with colleagues, suppliers and customers is encouraged. Respect. This will encourage the proper treatment of stakeholders and reduce the chance that they are treated unethically. Empowerment. Employees should be empowered to do the right thing and to refuse to behave in a way they know to be contrary to the organization's ethical code. Empowerment may well mean that employees should be prepared to whistle-blow. And finally, accountability. Accountability means that people do not try to avoid issues or obligations. If you're given something to do, if you make some sort of promise, you should try to do it to the best of your ability. Corporate codes of ethics. A corporate code of ethics can be defined as a written set of guidelines issued by an organization to its workers and management to help them conduct their actions in accordance with its values and ethical standards. It can be very important to organizations to have a corporate code of ethics, because if they don't, employees and managers can always claim that they didn't know what the right course of behavior was. A code that is implemented and supported by management can bring the following advantages to an organization. It emphasizes the organization's values, both internally and externally. It gives guidance to employees and directors about how to act in various circumstances. It will reduce the risk because it will avoid regulatory and legal problems. And finally, it will be good for public relations and for the company's reputation.